morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Well, Ladi, I'm just wondering if, you've been able to travel in a train here in Nigeria.
By rail here in Nigeria? No. But it's something I'm looking forward to, actually.
Absolutely. Looking at the train project or the railway project that we've been seeing currently, the federal government trying to bring up the rail project. I look forward to when we'll be able to, travel in a train. I remember then when growing up, I see train pass through our house, and then I'll be waving at the train and looking forward to traveling.
It'll be fun actually traveling. Well, you can actually, live out of town.
We experience that perhaps when we travel outside the country.
But here
we would love to experience it here in Nigeria.
Right here in Nigeria.
And more importantly, to have some of these petrol tankers, transporting the petrol commodity by rail. I think that should be one of the targets of the federal government. So we avoid some of the accidents that we have.
Because we normally have them around this part of town.
Absolutely. Yeah. Now, the rail transport system has been up and running in some corridors in Nigeria since 1990. However, there's been a long break along the way with decaying infrastructure. The good news is some of the facilities have been revitalized in recent years, but how much of the transformation is documented? In this special report, our correspondent Darido highlights how the history of the Nigerian Railway is defining the current state of rail travel and efforts at preserving that part of Nigerian Railway history. Let's take a listen.
At the railway compound in Ebutimeta, where all was said to have started in 1898, one still gets to see the solid foundation laid over a century ago on which some of the current structures are built. As new structures are fading out the old, some materials are abandoned unceremoniously, some kept as artifacts. The Nigerian Railway Corporation is one of the oldest institutions in the country. Of course, this place in the Ebutimeta, the railway compound, holds a special place in history, from personalities, buildings, to artifacts, from pre-colonial to post-colonial events. A walk down in this compound is a walk down memory lane. We are here today not only to trace the past, but to connect current situations and current events. One of the old locomotives can still be found at the running shed, old, rusty and immobile. We stopped by the Jekyll House, a mini museum at the railway compound.
Hi, good morning. Welcome to Jekyll House.
Thank you very much. Join me to take you through our history. The driver of the train will take a key from here, point A, Ebutimeta, and take that key and report that key that he has arrived as a way to log his presence at Ibadan. And then at will, the person managing or monitoring can call and communicate. This is an air alarm, and in this air alarm, it is used to signal an oncoming train for people who are walking on the tracks. So what happens is that, well, this is before the advent of the trains now had their own horns and sound, is that once a train is coming, you would have somebody, an onlooker, do this. And when he does this, he is telling people that a train is coming, a train is coming.
The railway heritage is not only preserved inside the building, there are some still sitting on rail tracks.
Okay, yeah, let's see. Okay, back. Yeah, back. Up. Yeah. This one that I'm sitting on is called the pump trolley. So in those days, this pump trolley is used in checking the tracks. So the technical officers sit down here, and we have 4 men that will be doing the pumping to make the pump trolley to move.
Away from Ebutimeta, we caught up with 90-year-old engineer Nathan Koro, nicknamed Authentic Railway Man, a name he earned for his vast knowledge of the Nigerian railway system, having worked as the first managing director of the corporation.
NRC headquarters became headquarters because the British were here. From 1898, they started construction of the railways from Lagos. So everything was settled here. The white people moved to Okeira. That's the present railway headquarters, where we live in Butemata. That area is called Okeira. Did you know that? Well, that's the name. Okay? That Okeira was first round from the market area. That was Okeira. It was the white people. We were about the first group of black men to live there. There's no light, eh? Why haven't you put it on now?
It takes us to his library, where he stacks up a catalogue of books about railways and still documenting more on his laptop.
So everything you want to know about railway, development is here.
By trying to preserve history, because we seem to have lost a lot of...
But how many of them have asked us, what sense? What do they know? They've lost even the books. They don't have. Some of us have them.
The story of the Nigerian railway is not complete without tracking and documenting key events that shape the railway ecosystem. These custodians of history believe will further help the nation foster more development of this sector. Dari Ido, Channels Television News.
And oil prices were lower in the afternoon of Asia trading hours of Thursday, with international benchmark Brent crude futures falling 0.22% to $72.07 a barrel. U.S. crude futures slipped 0.14% to $70.20 per barrel. On Wednesday, prices rose more than 4%, extending gains as improved risk appetite provided support, despite data showing an expected rise in U.S. oil inventories. And now for updates on the oil markets and other commodities-related issues, Desola Simoni, research analyst with Financial Derivatives Company, joins us now. Great to have you, Desola. Good morning.
Good morning, Lady. Thank you for having me on the show.
Yeah, so oil prices gained 1.86% yesterday to $70.64 a barrel, despite surge in COVID infections, expected fresh oil from OPEC. What's pushing oil at this time?
Thank you for the question, Ladi. As you have seen, oil prices have been very, very volatile this week. I mean, from Sunday when OPEC agreed to increase their production outputs, to increase their output, and then to the issues around rising coronavirus cases in key economies in the UK, in the US, and in Asia. And now with bigger than expected build-up in US crude stockpiles, analysts were expecting a drawdown of about 4.5 million barrels last week, but instead we saw a surprise build-up of about 2.1 million barrels per day. So all these factors were weighing on oil prices, or were supposed to drive oil prices downwards. However, we saw yesterday oil prices trending upwards surprisingly, and that was driven by a risk-on appetite. We saw suddenly investors had improved appetite for risky assets, and they were buying a lot of oil, and that's part of why we saw oil prices rise yesterday. But again, like you said, today oil prices are lower now, and we expect oil prices to remain volatile in the next coming weeks.
Now, the big investment banks, JP Morgan, Goldman Sachs, and Citibank, see oil reaching $80 per barrel by end of 2021. What's your view on this forecast?
I think that's a little bit too optimistic because, I mean, and their forecast, right, is hinged on improved oil demand growth and, a tight oil market, essentially. So they are betting on, a strong a strong economic recovery and strong oil demand growth with supply remaining constrained. And they have the view that even with the improved, supply coming from OPEC, that's like the increase in supply about 400,000 barrels per day starting August. They think that is still supportive of the market, and they forecast that the market will still be undersupplied by around 300,000 barrels a day for the next 12 to 18 months. So those are the factors on which they base their forecast. However, one factor that they are now beginning to take into consideration is the fact that despite vaccination is rolling out at pace, being vaccinated does not mean that a person cannot contract coronavirus or a person cannot spread it. For instance, here in the UK, around like 88% of the adult population have been vaccinated. And at least I've received a first jab of the vaccine of coronavirus vaccination, and around 66% have received double doses of the vaccination. Yet, over the weekend, or I think early in the week, we still had the sharpest increase in coronavirus cases since January. So that just suggests that, despite the vaccination, we can still have these spikes in new cases, and that could, introduce new restrictions. For instance, the United States has urged the citizens not to travel to the UK. That is going to affect demand for air travel, jet oil, for instance. So what I'm saying is that we're a little bit optimistic, and we feel like, a more conservative estimate is somewhere around $65 to $75 per barrel.
All right. I guess I'm not going to work with that projection. Well, bringing it down to Nigeria, we've seen sustained downward trend in the external reserves balance of the country, despite, the continued recovery in oil price. This trend has stoked concerns about the ability of the country to support the import of goods. What are your thoughts around the external reserve and imports sustainability?
Like you mentioned, Ladi, the level of external reserves have been trending downwards year to date. I think it's down now about 7% year to date, but in the last few months, the decline has been flatter. So this month, month to date, external reserves was down just, I think, 0.5%, so which is good. And one of the reasons is because of, like you mentioned, despite the fact that oil prices were elevated in the global oil market, Nigeria's production was constrained in compliance with the OPEC production quota, which was 1.4 million barrels per day. And also the central bank kept on, injecting FX into the market. I think in Q2, the central bank injected an average of $114 million into the FX market. So that's, that's part of the contributory factors that contributed to the depletion of the external reserves. But in terms of import cover, I'm not too worried. Nigeria's import cover is around 8 months. Nigeria has around 8 months of import cover, and the recommended rule of thumb, but the recommended threshold for developing countries is around 3 months. So in that sense, I think Nigeria is in a good space in terms of import cover. And now with oil prices rising and with more room in terms of production quota, Nigeria's new production quota is around 1.8 million barrels per day. So with that, I think that we will receive higher oil receipts, which will be supportive of our external reserves and which will increase import cover.
Now, given this trend on the oil market, what should we expect in terms of Naira stability?
I think it's positive, right? So we think if despite everything that is going on, despite the fact that we expect some more volatility in the oil market, we think that prices will still remain elevated in the near term because the oil demand growth has still not reached pre-pandemic levels. So there's still room for growth in oil demand growth, and the increase in production from OPEC is still supportive of a tight market. And I agree with the big banks when they say that they still expect the market to be undersupplied. So in that sense, we expect prices to remain elevated, and Nigeria now has more room to produce more oil. So we think that in the near term, at least the near to medium term, we'll have higher oil receipts, which is positive for our level of external reserves, and which is is also positive for our external balance in terms of balance of trade. I think we'll narrow our deficit or move to a surplus in this higher oil environment. I think that's positive for our external reserves and also reduce some pressure on the exchange rate. So I think it's positive for our exchange rate as well.
No, but if oil prices continue to rise, Nigerians may end up paying more for petrol. And the DPR just, clarified a statement attributed to it, saying that unless alternative sources of energy, which will act as, price buffers are created, the price of PMS, could be subject to prevailing market prices. What other sources of energy are we looking at here?
So Nigerians will only pay higher oil prices, higher PMS prices, if the subsidy is the fuel subsidy or the what is called under recovery purchase, if that is removed. To my knowledge, that is still remain. That still subsidy still remains and should likely remain up until the end of the year. So I don't see Nigerians paying higher PMS prices anytime soon. So, but in terms of alternative energy sources. I think that's off the top of my head, I think electricity, but Nigeria is not ready to have electricity-powered cars like Teslas and the likes here. Or an alternative also is a natural gas, and that is a more, I think, long-term approach. So in the immediate term, or what is visible immediately, I think would be to revamp the refineries. We've had a discussion before, Ladi, to revamp the refineries, and also to revamp the refineries or to build new refineries. In that way, even if oil prices increase, Nigerians won't pay more for oil because we'll not be importing much oil. We'll be refining our PMS locally.
Yeah, talking about revamping the refinery, of course, the NNPC says the Port Harcourt refinery will come online in September 2022. Remember the rehabilitation that is going on after paying $1.5 billion for that. But one would wonder how feasible this is.
For lack of a better word, Chimize, no be today. Like we've had these discussions before. In the last 12 years, the Nigerian government has tried and failed, or tried unsuccessfully, to revamp the refineries 4 times. The latest one, the most recent one being in 2019. Obviously, in theory, if it is done, if, for instance, the Port Harcourt refinery is the largest refinery in Nigeria, the largest government-owned refinery in Nigeria, and it has an installed capacity of, I think, 210,000 barrels per stream day. So that is like about a third of Nigeria's oil consumption, which is good. If they can, if Nigeria can make it work, it is positive in the sense that, to reduce Nigeria's fuel import bill, right? And it will support the external reserves and support the exchange rate as well. That's if it can be done. But we've been here before, we've had this discussion, and my own question is, how is this different for the other times when the government has tried unsuccessfully? I mean, I read up that, it's being managed by foreign firms. I think the African Export-Import Bank is involved. Until we start pumping oil for at least 6 to 12 months. And, we start refining until it comes online and starts pumping oil for like 6 to 12 months before myself and other Nigerians will believe that, okay, this is actually the real deal. This actually works this time. Up until then, I think we remain very, very skeptical.
All right, let's look at other commodities now. Now that the festivities are over, even though I and Chimi didn't get any ram, do you think that commodity prices will taper down? And where do you see prices near term?
I think prices will remain elevated in the near term because yes, there was this huge demand coming from the festivities, but for more fundamentally, the drivers of domestic commodities prices are the level of insecurity, especially in the growing areas. First of all, for the farmers to plant their crops, but also for transporting the harvest from the north or from the middle belt where they are planted down. I think because of the high level of insecurity, commodities prices will still remain elevated in the near term. I'll give an example. Look at the price of tomatoes. Over this month, it has increased for a 50 kg basket of tomatoes. It has increased 140% to 60,000 naira. That was not driven by demand from Salah. It was mainly driven by this level of insecurity, and now add the flooding. Those factors I think are constraining supply, and because of that, we expect the prices to remain elevated in the near term. Unfortunately.
All right. Thank you very much, Desola, for your time with us this morning. We do appreciate it. Enjoy the rest of the day.
Thank you for having me.
We'll take a break now. When we come back, of course, markets resume after the Eid holiday. What do we expect? These and more in a moment. Well, after the 2-day holiday, financial markets are open for business again. What should we be looking out for the rest of the week and possibly the year? We have Akintoye Oyeleku, investment analyst at Codros Asset Management Limited. Good morning, Akintoye. Hello, good morning, Akintoye.
Okay. Seems we don't.
Oh, we seem not to have Akintoye there. Well, let's look at. Good morning, Akintoye. Good morning, Akintoye.
Can you hear me?
Okay. All
Yes, we
right.
can.
We hear you now.
Akintoye, yeah, if you can hear me now, the financial market has been dominated with mixed sentiments, especially after the last auction results showed a successive moderation in the stop rates following the outcome of the Treasury bond market auction by the DMO. What are your expectations about the fixed income market?
All right. So yeah. So what we are seeing, the pattern we are seeing in the fixed income market is similar to what we have seen through the year. You will recall that at the beginning of the year, we saw that yields started rising in the money market space, especially for treasury bills and also OMO bills. We saw that yields started increasing, and then investors started to price that in into bond pricing. So we saw that yields have risen since the beginning of the year, and now we are starting to see a moderation at the money market. For instance, at the treasury bills market, in the last 4 or 5 auctions that we are seeing average stop rate for treasury bills continue to decline. And investors have started to price that into the bonds auction. If you look at the last bond auction, we saw that yield across all the instruments that were offered saw declines from the previous levels. And again, when you observe the total that was offered for subscription, it was around 150 billion. But the DMO actually allocated around 130 billion, implying that the DMO is not willing to, continue to increase rates at the bond auction. So this means that what we are likely going to see for the fixed income market would be that yields will trend lower from the peak that they have gotten to since the beginning of the year, especially when you factor in the high system liquidity and also the fact that the DMO will be looking at reducing the cost of borrowing since there are still a lot of planned borrowing for the remaining part of the year.
All right. How would the current developments in the fixed income market shape performance of the equities market in the third quarter?
Yeah, so it's just going to be a reverse. If you recall, at the beginning of the year, the equities market started out on a positive note, recording around 4% gain. However, when we started to see yields trend higher, we saw that investors maintain a risk-off sentiment for the equities market, and then we saw a lot of buying interest in the fixed income market. But now that we are expecting yields to trend lower for fixed income markets, given the high system liquidity and the drive for reduction in the cost of debt to the government. We're likely going to see that investors will now be monitoring development in the equities market, especially when you consider again that we are currently in the earnings season. Investors will be looking at stocks that are going to offer them very good dividend yield, and also stocks that are expected to perform well that are going to perform well in the half year. So this would be majorly, it's going to be majorly a positive impact on the equities market for the third quarter.
Now, considering the existing market conditions, what would you advise investors in terms of taking positions for their portfolio holdings based on the expected performance of the financial market?
Yes, so there are many opportunities at the moment. For instance, we expect yields to trend lower in July, given high system liquidity, and even for the remaining part of the year, we are going to see some kind of low yields. Maybe sometime in the first quarter, we might see yields trending high again. But looking at the third quarter, investors could take position into bond instruments and other fixed income instruments as we expect yields to trend lower, given the system liquidity that is expected to hit the market in the near term. So for the equities market, like I mentioned earlier, investors should look at the dividend yield opportunity, and also they need to analyze the performance of the companies, and then based on this, look for fundamentally sound stocks that will offer them a good dividend yield. So investors could also take position in fundamentally sound stocks. And lastly, for investors that have a medium to long-term investment objective, they could look into exposing their portfolio to dollar assets or other more stable currency. This is because of the fact that we saw the impact of COVID-19 on Nigeria's FX stability in 2020, and looking at what we currently have, the issues have not changed. Nigeria is still largely dependent on oil, which means that whenever the global economy suffer another shock, Nigeria will likely still suffer from FS scarcity, which could prompt a devaluation or depreciation. As a result of this, investors could take position in USD denominated assets such as Eurobond. Although for investors that do not have the capital to acquire Eurobond into their portfolio, they could look at purchasing dollar funds, which are less costly, to diversify their exposure. A better decision for investors would be balancing between all these investments that I've discussed, having an exposure to the equities, to the fixed income instrument, and also to foreign currency instrument, based on their risk appetite.
All right. So the Monetary Policy Committee is set to meet on Monday to discuss policy direction of the economy. Given their previous stance on key policy metrics, are you anticipating changes in the decision?
Yeah, so basically, in the last meeting that was held in May by Monetary Policy Committee, some of the factors that shaped the decision to hold rates for the fact that there was a moderation in inflation numbers, and also there was what's it called now? There was a expectation that with the weak base effect of Q2 2020, and with the economy already reopened now, we are going to see some level of improvement, in activities which should drive the GDP performance, and also when they consider the weak growth of the fourth quarter of 2020 and the first quarter of 2021, they decided to leave this rate at they decided to leave the key policy metrics at their current level. So what we have again is that for the third quarter of 2021, compared to third quarter of 2020, we still had a weak base in 2020, even though it was better than the Q2 2020, given the fact that we saw a reopening of the economy in the third quarter. So there's still going to be a weak base, which will support the CBN to hold key policy rate. And also, if you notice the inflation figures, now we have seen that the inflation numbers are moderated, given the high base effect, although it doesn't reflect what is currently happening, on a month-on-month basis. So looking at all these factors, there's a high tendency that the central bank will likely hold the key policy metrics again when they meet next week.
Now, for most of part of the year, the external reserves have sustained the downward movement regardless of the development in the crude oil market. Since the beginning of the year, the foreign reserve dropped by about 6.4% to settle at $33.1 billion. Now, why are we not seeing the positive impact of the oil demand recovery on the reserves?
Yeah, so basically, like you mentioned, there has been a sharp decline in the external reserve, although if you want to assess it more closely, you will see that since the beginning of the year, the central bank has continued to improve the supply of FX across the major FX windows. For instance, if you look at the I&E window, in the beginning of the year, we had around $50 million daily average turnover in the I&E window. However, when you look at it till the current figures, we have around 140 million, which represent daily average that has been done in the I&E window, mirroring the increase in dollar supply to that segment. So basically, the increased supply of dollar to FS segment has led to contraction in the foreign reserve balance. Again, in the second quarter, OPEC had Nigeria to meet a maximum of 1.4 million barrels output per day for crude oil. However, Nigeria was not even able to reach that level, given the deficiency in the equipment that used to produce oil. So this affected our ability to optimize oil revenue in that period. Looking at the last OPEC meeting, OPEC has now allowed Nigeria to produce up to 1.8 million barrels per day, which means that Nigeria will start to see more significant inflow from oil, especially if you consider the fact that this is going to be starting in August, which is just next month. So this is positive for Nigeria. Again, Nigeria is expected to borrow around $6 billion for the remaining part of the year. So representing the external reserve balance, external loans, which will support an accretion in the external reserve balance. So overall, this will impact in the FX looking at the remaining part of the year.
All right, I guess we'll leave it there now, Akintoye. Thank you so much for your time on the program. Akintoye Oyelakun is the investment analyst, Cordros Asset Management. Thank you so much.
Thank you.
All right, moving on to the markets now with Aniete. Aniete, it will be interesting to know how the markets have opened up after the holiday.
Yes, good morning, Ladi. Like you rightly said, it was not a holiday for us, but it was a holiday for the markets. And of course, most of them or all of them will be opening. But let's pick up from Monday. Monday, it was just that bearish, not too much of activity at the bond market. And this, of course, happened just as the debt management office had conducted three auction on three market instruments. That's the February 2028 paper, the FGN March 2036 paper, as well as the FGN 2050 papers. But of course, it's very, very interesting to know that the instruments were oversubscribed, but not too much compared to the previous one. And then, of course, the auctions were lower compared to the previous sessions. Now, also, when you take a look at the Treasury bills, still the same thing, not much. The yield on that instrument has fallen by to about 8.67%, of course. And then also at the OMO auction, which we expect that once the market resumes today, there's going to be an OMO auction by the central bank, of course. So now, when you flip over to the central bank special bills, like I said, this is a pickup from Monday's closing. So we're going to be on the lookout for how the market pans out at the close of today's trading session on Thursday, just a day before we enter into the last trading day of the week. So also, now let's move over to the unlisted securities market. It was down by 0.44% as at Monday, and that's in contrast to what we had on Friday, where we had some positive sentiments there. Of course, only three securities were traded there, and then that's down by 4 in contrast to what we had. But let's go back to the fixed income market to tell us more about that market and what to expect today. Let's join Ijoma Onwukwe, who is a fixed income trader at FSDH Merchant Bank. Okay, all right. I think we would have to flip over that market and go to the equities market. Now, to tell us more about the equities market, let's join Abdul Rashid Momo, who is a trader at TRW Stockbrokers. Good morning, Abdul Rashid.
Good morning.
Okay, so welcome back to the market, or welcome back from your holiday. And I think what I would like to ask you is, now most of the stocks on the market, the month of July has not been, it's been a flexing of muscles between the bear and the bull. So now, most of the equities there have been trading below their real value. So what are the stocks that we can really look out for? What are the stocks that investors can really look out for, especially when the market is currently at trading right now?
Basically, what happens is that technically, when prices are range bound for a long time, what happens is that it explodes, it breaks out. It's like when water is trapped in a pipe and there's too much pressure. So far, we know that what investors are actually looking at for the interim dividends that could be paid by let's say Access, UBA, Zenith, and the rest. Basically, what you need to know that all the period of after July, right, the market is always down historically, but last year was very good. So because all the good juices are over, different payouts and the rest, then we now have what they call the window dressing end of the year, end of half year, which is July. So basically what is happening now is that investors are looking into the next areas to key in. So most of the trades are more of cautious trades. People are watching, they are not moving into money market instruments for now. But basically the market is range bound. Explosion is going to happen soon, either to the upside or the downside. But for me, I think it's going to be more of the upside. Because so far so good, the financials have been okay despite all the issues happening in the country.
Okay, so with that being said, Abdul Rashid, it looks like there's not much of we had been expecting the markets to pour in lots of earnings into for us to digest, and that doesn't seem to be coming. So now, what are the stocks that you expect that will be presenting there? Oh, sorry, I think there's a loss in connection to that. So okay, so like rightly said, the market is just beginning to the trading is just beginning today. All the traders across the financial markets are just resuming from their two-day Muslim holiday. So we'll be on the lookout for how all the markets turn out at the close of today's trading. We're all hoping for a bullish sentiment, if that's anything to come by.
But Anita, what's your bet, green or red today?
Well, like I'd always tell anyone, always be cautious. You may put your mind on optimism and then have your hopes dashed. But of course, always keep that hope alive, especially across all the markets.
Okay.
Yeah.
All right, Nita, thank you so much.
That's my take.
Okay. All right, we'll take another quick break now. When we come back, we do an opening call to London. Do stay with us. This is Business Morning.
All right, let's see what's happening in London with Juliana. Good morning, Juliana. Retail industry leaders are warning that supermarkets are under increasing pressure to keep shelves fully stocked as the growing havoc wreaked by the pandemic continues to force thousands of workers to self-isolate. What are the issues here?
Yeah, you got it right, Chimase. Good morning. It is pingdemic, and it's fast becoming a national concern, not only because we've got 3 senior ministers self-isolating because of being pinged by the NHS app. We've also got the leader of the opposition, Labour Party, Sir Keir Starmer. He's also suffering from it, as well as about 1.7 million people. There are pictures doing the rounds on social media showing shopping aisles practically empty, and that's because so many staff are off. Of course, once the economy started to reopen, COVID didn't go anywhere. COVID is still running rampant across Britain, and if you happen to come into contact with somebody who's tested positive for COVID-19, you are going to be getting this ping. There's lots of confusion around the pingdemic. There are some ministers that have gone on national TV telling people that they can ignore them. Some bosses are advising staff to delete the app, and that's because it's not exactly a legal requirement unless you've had a call from NHS Test and Trace telling you to self-isolate. Some people are suggesting that you don't have to actually follow these rules, but of course the vast majority of people are, and that means lots of stores are having to shut down. Iceland in particular, one of the big grocers here, they've had to shut several of their stores, and the issue is getting worse. There are discussions taking place within Whitehall at the moment which suggest that the government may actually need to reduce the sensitivity of the app so Britain's economy can start ticking again, because at the moment this is becoming a national outcry.
And there seems to be temporary fuel supply issues at some of BP's petrol stations. What's the problem?
Well, this problem has got much to do with the pingdemic, but then this has also got to do with a shortage of lorry drivers. According to the National Haulage Association, Britain is short of 60,000 drivers. Lots of this has got to do with the pandemic, because last year training for about 30,000 drivers was suspended because of following the COVID lockdowns. And now, because of pingdemic, many of these warehouses have had to stop their deliveries and their logistics because they just don't have enough staff. This is affecting BP. According to some reports, there are just a few hotspots across the country, which means that BP have had to shut their petrol stations. They did release a statement this morning telling customers and drivers not to worry, that they will be getting things up and running at the moment. But this is a major cause for concern. Kwasi Kwarteng, the business secretary, he's been doing the media rounds this morning, saying that it's basically the media that are hyping up this story, and there are no major causes for concern at the moment. But of course, as more people start coming out of the lockdown restrictions, the visibility of this app is going to become a larger row. So we are waiting for an update from the British Prime Minister on this.
All right, and we hope you give us an intraday update later on Business Incorporated. Okay, let's look at the crypto market now. Well, Laddie, Elon Musk is at it again, and he says, again, Tesla will accept Bitcoin as mode of payment, and he says he owns Ethereum.
Yeah.
How is that driving sentiment right now?
Well, that's the effect there. We have green this morning. And he also mentioned that he doesn't dump Bitcoin. What he does is pump. So, well, we see a Bitcoin at 32,000 and a couple of macro caps all in the green. The big cap, BNB, Ethereum, DOT, and we have the stable coins in the red this morning, showing that traders are running into the market at this time. Market cap has jumped back up above the $1.3 trillion mark, up 4.19% this morning. That will be the B-Ward conference effect there. 24-hour volume traded $78.95 billion this morning, up about 24%. Bitcoin dominance, 46.02%. It's inching up gradually there. Price of Bitcoin at 8 a.m., $32,021, up 3.75%. All from the positive comments from Elon Musk, Kathy Wood at the B-Word conference. We see that we had that jump there from the 29K region on the 1-hour chart, up there, hitting almost close to 33,000. We still have the MACD in bullish territory. The RSI is got overbought at some point, but now it's tending back downward. Price of Ethereum, $1,983, up 5%. 24-hour volume traded is quite impressive this morning. $20.47 billion traded in Ethereum. Let's bring in Rume Ofi now. Hello, Rume.
Hello, Larry. Good morning.
Good morning, Rume. So it's the day after the B-Word conference. We had Kathy Wood, ARK Invest CEO. We had Elon Musk and the Jack Dorsey. What were the key takeaways for you?
For me, I think people should be aware about the evolution of money. Money is actually moving to the people. It's not, we don't need third party anymore with money, where we have people being intermediary. We can always do transactions from anywhere in the world without restrictions. But, you know, all of this has to be done in the proper way. But I think I like the fact that Elon Musk came up to say he owns Bitcoin. His company, SpaceX, also owns Bitcoin. The Tesla owns Bitcoin as well. But he talked about he had also Ethereum and Dogecoin. You know his affiliation with Dogecoin. That is really, really very, very popular. But he's concerned about mining. He said the mining is gradually moving towards renewable energy, and very soon Tesla will resume acceptance of Bitcoin for purchase. That is a very great news. And Square, Jack Dorsey, the owner of Square, coming up with some new technology around hardware, wallet system, and e-commerce that will accept cryptocurrency for payment. So I think it's a very nice experience yesterday. But there's something he said that was more like a takeaway for me. He said that government has the monopoly of violence. That government is the biggest corporation. That if you don't like corporations, that means you won't like government. So that is what I think money is actually going towards now. We have to see the independence of people using this to transact without government, more like the trade by barter system we're doing in those days, or in a more robust form using technology.
I guess it's still all about decentralization. But, you know, the market is in extreme fear. It got as low as 10 points yesterday. What's the risk-reward like for anyone looking to enter the market at this point?
All right, there are two kinds of persons involved in this industry. Those speculating and hodlers, right? At some point, we were speculators, but now I don't speculate anymore. I hold this because this is the future of money for me. So all of those people speculating are the ones that will go into the market, get a few, and the ones actually making the whole market look uncertain, right? I'm a Bitcoiner, so I wouldn't want to see Elon Musk's effect was why it comes yesterday and today there's a bit of fear. Bitcoin is actually fundamentally bullish. A few young people around my field that I mentor will tell me I'm always bullish because a lot is going on.
Always
a lot of people are coming into Bitcoin. Yes. Nigerians are coming into Bitcoin, and I'm so proud to be a Nigerian. A lot of young people are coming into Bitcoin and getting these assets, holding these assets for their future. And I know the future is going to be bright for Africans and Nigerians, and I believe the price is going to be something that we'll look and say, wow, once upon a time, the price was $30,000, and I know it's going to hit the roof very soon. So let's keep our fingers crossed and see the price. Really appreciate very high.
Anyway, Rumi, I guess you're one of those ones with diamond hands, right?
Yeah, I think mine is more than diamond hands now.
More than diamond. Okay.
Now because I think this is the future for me, and the future is really, really exciting for me. Thank you.
All right, Rumi. Always great to talk to you. Thank you so much.
Thank you, Laddie.
Yeah, Jimmy, there you have it. Rumi has diamond hands.
Yeah.
Top odds market cap all up.
Well, I guess it's about
6%.
the Gen Zs. I mean, he's talking about the youths, Nigerian youths.
Yeah.
Playing in this market. But my dear, you can't just rule out regulation in this market because it's very important. And I think that's what government all over the world are trying to get a hold of.
Exactly.
To see how they can regulate this market so that when you are playing in this market, you play with confidence. But Ladi, if I may ask you, now we're beginning to see some kind of bullish sentiment back in the market. Well, we don't know what the narrative is. Well, Rumi said he can't just pin it on Elon Musk's comments there, but that Bitcoin on its own is bullish. Now, for you, what's your coin pick?
Well, it's still ZRX at this point, but you know, I'm always still cautious in this market. This could just be a dead cat bounce, but who knows? We'll just, keep watching.
Well, in every market, particularly risk assets, you have to be cautious. And while playing in this market in particular, you have to be very cautious.
Very, very cautious.
All right, that's it on the program. Thank you for watching. I'm Chimizi Obi Iwagu.
And I'm Ladi Williams. Don't forget to join us, 1:30, Business Incorporated, for more updates on and developments in the world of business. Thank you so much for watching.